What's up, guys? Welcome to another video. In this video, we're going to talk about a EV charging stock, or EV charging company that is not one of the big names that you know. So we all know about Blink. It's not Blink. We all know about ChargePoint. It's not ChargePoint. We know about evgo. It's not evgo. So this is a new company that I had never heard of before. And the way that I kind of came about it is I saw this article that came out, right, for the White House rolls out $5 billion funding plan to states for electric vehicle chargers. So basically, you can read it here. The key points. Biden administration this week rolled out a plan to allocate $5 billion to states to fund electric vehicle chargers over 5 years as part of the bipartisan infrastructure package. It will give a broader agenda to combat human-caused climate change and advance clean energy transition. Despite the rise in EV sales in the U.S. in recent years, the transportation sector is still one of the largest contributors of greenhouse gas emissions. So, basically, the Biden is rolling out a plan to build out charging infrastructure. So, as hybrids get to be more common and more popular, and more people have them, we need to have more charging stations, right? I mean, it makes sense. There's gas stations all over the place, but there is no real network of charging stations. So you wouldn't be able to go across the country on a single charge, and it's very difficult to find, charging stations in some of the bigger states, and the range on your vehicle might not be enough to get you from charging station to charging station. Anyway, long story short, they're building out infrastructure to make it easier and more attractive to people to buy EV vehicles. So, but anyway, if we read through this a little bit, right? If we look through this article, it talks about here the $7 billion to build a sprawling network of EV chargers across the country. There's a video here if you'd like to see it. Talks about the rise of EVs and how people are starting to move back towards gasoline vehicles just because it is easier to refuel rather than to find a charging station. But anyway, in here, this is the part that got me here. So the program to build out charging stations could save an average driver who uses an electric vehicle up to $1,000 a year in gasoline. President Joe Biden said Tritium, an Australian company that makes EV chargers, is set to build a manufacturing facility in Tennessee that will produce up to 30,000 chargers each year and create 500 local jobs. So anytime, and this is a CBS article, and it is front and center. Anytime I see a company that I don't know, obviously you want to look into it, right? And they're getting the backing of the government, so they must be doing something right. So I saw this and I said, what is Tritium? I've never heard of Tritium. And upon digging a little bit deeper, it's very interesting. And we're going to kind of go through this company and talk about where they fit in the puzzle piece of EV charging companies. So obviously not 100% of this work is going to go to one company. It's going to be spread out, but they could be in for a large piece of the puzzle. So let's look at the company as a whole right now. So this is their Analyst Day presentation. This is another long presentation, maybe 60 slides or so. So I just picked out the ones that are the most relevant. In this, we're going to talk more about them compared to their competition. We all know the benefits of electric charging stations and the whole EV market and how it's going to boom over the next couple of years. That's not in question. But what we do want to question is, why would we buy Tritium over some of its competitors? So let's just look at kind of their presentation, and this is from September 2021. So it doesn't have the end of the year numbers and forecasts and all that kind of stuff, but we can still use this as a good gauge, right? So if we're looking at it, we see that the transaction summary, this is talking about the acquisition that it had from Decarbonization Plus Acquisition Corporation. It was a SPAC, publicly listed. They bought it, right? $15 million pipe from Palantir, which is interesting. Investors will receive shares post-closing of the Australian company. So now, the valuation. Let's talk about the valuation. This transaction reflects the valuation of Tritium at $1.2 billion. So now if we're looking at the market caps of those existing companies right now, Blink is at $986 million, ChargePoint's at $4.6 billion, evgo is at $2.8 billion. So the initial transaction for Tritium puts it at the second lowest. Blink is obviously the cheapest, right? But it's still lower than ChargePoint and evgo. So I think that's something that's very important to recognize. It also shows here that 70% of the existing shareholders and 30% of the SPAC's shareholders. So that's the transaction summary. If we're looking at this one, it talks about enabling clean energy through the DC fast charging infrastructure. Talks about the global reach, the amount of chargers that it's sold so far, over 5,250. How many countries? 41. 84 million forecasted revenue. But what I want to point your attention to is the DCFC market leader says it's the only pure play DC fast charging infrastructure OEM upon closing. Now, it's also interesting because its competitors use DC charging too. So their main focus is that DC charging stations are faster than AC charging stations, but their competition uses DC too. So yes, it says they have the first mover advantage here, but everyone else seemed to have caught up pretty quickly as well. Another thing though that is interesting that I do like about Tritium is that it says IT, intellectual property. It's the only liquid-cooled IP65 rated charger technology. So their claim is that liquid cooling is much better and faster than air cooling. So that is something that does set it apart from its competitors in that way. The value is a 67% discounted to peers in 2023. Goes through and it compares to Blink, ChargePoint, evgo as well. Obviously, Tritium is a newer company, and they still have room to grow. But you can see how it kind of compares to some of its chargers, its competitors in the charging space. So then they talk here about the DC fast charging and how it has the advantage over the AC charging. I just talked about that before. You can kind of pause the video if you want to look at it in depth. But in terms of what we're looking at here, if they have DC charging and their competitors have DC charging, then they're all in the same boat, in my opinion. So I don't see this as something that would differentiate them above their competition. Lowest total cost of ownership. This is important just as a side for the company. I think this is good to see. They talk more about how the lower cost of ownership, and then later on you'll see that they can switch from a different business model as they sell chargers, and then they offer more support. So that's interesting too. So strong revenue base with a history of rapid growth. Obviously, they expect to continue to grow. They talk about the COVID supply chain impact, and but that affected everyone the same as well. So that doesn't really change in the competition. 2021, 2022 updates. So this is their, if you look, Q4 2021 earnings estimate is 44 million. Now, if we were to compare that to the estimates of their competition, we could see Blink has 6.5 million, so way under. ChargePoint 75 million, close to double. evgo 6 million. So they're actually well positioned. There could be a range. It's not going to be exactly. All these numbers aren't exact because we had to see how they do and what they report. But based off of estimates, they come in under ChargePoint, but way ahead of Blink and evgo. So I feel like that's very interesting when you look back at the market caps that we talked about. So I think that's very good for Tritium. Then they talk about the revenue scales for the industry growth. So as you can see, they talk about the chargers, services, and software. And you could see as you ramp up, you're going to start making all your money with the chargers, and then as people have the chargers in place already, then you're going to kind of switch to a bigger percentage of the services and the software till finally they show in 2026, you see that range, right? It moves to about 17% of their revenue will be in the services, about 10% will be in the software, and they'll still maintain the lion's share in the charging installations themselves, but it'll be a more balanced type of revenue growth. And I think that's going to be the same for all the different charging companies as well. As the infrastructure is built out, then it's going to get moved to more of a maintenance income. But I feel like that was interesting to share. Robust growth and near-term positive cash flow conversation profile. What really sticks out to me in this slide is if you look down at the free cash flow model, or free cash flow, it shows that in 2023 they expect to be profitable in terms of the EBITDA percentage. So this is a growth company. There is a lot of growth ahead of it, but they're not rushing it, right? So I think that the profitability will actually be further at maybe 2024, but they're saying it's 2023. So it's a growth company. We're going to have ups and downs with it, but it does look like it's well-positioned compared to its peers, right? Lastly, they talk about the AC charging stations and low-power DC chargers. And this, like I said, it doesn't really differentiate them from their competition because their competition uses the same DC chargers as well. But I think it's very important to note that it does help their overall line. So that's basically the presentation that they gave. If you look at their management team, I think that's another very interesting point. What I noticed, and you can look at it for yourself, they don't have a ton of experience, but they all seem to be well versed in this company. So I don't know if that's really a benefit or a detriment. I mean, they've all been working together for a long time, and they seem to have knowledge in this space, but they don't have the knowledge. Like, you don't have anyone that used to work as a C-level for McDonald's or, Microsoft or Amazon. You don't have any big-name companies, and part of that is probably because they're based in Australia. So maybe there are bigger companies in Australia that I'm not familiar with, but I think that might be something to think about too, that they don't have the big names behind their C-suite. But anyway, guys, let me know if you are invested in this company, if they look interesting to you. And we're just going to go and we're going to look at the charts next. So, guys, this is the chart. I put ChargePoint and Tritium, which is ticker symbol DCFC, along with blnk and evgo, all in the same chart. We put it in terms of percentage because there's a very large difference in the cost per share, so this is a better way to look at it. And DCFC Tritium is the blue, and ChargePoint is the orange, blnk is the green, and evgo is the yellow. So what you'll see is there's an overall trend, right? They all kind of move in the same fashion with the exception of Tritium, which is a newer stock. It just SPAC'd, went through a SPAC recently. So the established three, right, they move in unison. There might be a little bit of difference, but they all kind of spike and come back down together. And it looks like Tritium started to follow suit, right? They all started to drop a little bit, and they started to drop. This is where we got the news from Biden that their name was dropped, and then you saw this giant spike. But it has since come down, and we're actually reaching the level of evgo. We're getting close to it, right? If you look on the MACD, we had this giant spike up, and then everyone sold off. They sold the good news, and we're starting to go negative on the MACD. The RSI went up crazy to 79 or 80, came all the way back down. So if you're watching this in real time, if you're watching this in, within a couple days of being released, what I would do is I would give it a couple days, let it kind of settle. It's going to go down based on, the bad news of everything with Russia and Ukraine and everything like that, and the overall market sell-off. But I think we're getting to a point where it might be a good entry point if you're looking long-term, or if you believe in some of these other stocks, right? So anyway, guys, that's just my own 2 cents. Let me know what you guys think. Which you like, which is your favorite of these 4 charging stocks. Let me know in the comments below, and I'll see you guys on the next one.